Good morning, everyone. Welcome to our live daily market outlook for Monday, 23rd of July, 2012. Beginning of the week starts as a continuation of the previous week, a quite negative sentiment as single currency continues to lose the ground, especially after losing important and psychological 122 support. Also clearing 121.50, that was our initial target, June 2010 low, and pushed by overnight's gap lower opening, now trading currently below 121.100 and heading towards our next target and very strong and psychological support at 120 zone. A negative tone increased by fears, mounting fears about the current crisis in Eurozone. Actually started from the Asian session, as Asian shares also slid along with the euro, hitting a multi-year lows. Just a reminder, euro hit its fresh from 2006 last time seen levels lows. The last level was 120, around 120.50 zones we've seen in 2006 after breaking 2010 June low at 121.50. Fears the Eurozone's fourth largest economy, Spain, will be forced to follow Greece, Portugal and Ireland, which were thrown lifelines by international lenders after their borrowing costs shot above sustainable levels, draw the 10-year U.S. Treasury yields to a record low, 1.43% early in Asia. Spain's fiscal woes triggered selling in oil, sending both Brent and U.S. crude oil down more than $2 a barrel from their recent highs posted last week. The European stocks were also likely to extend their Friday's losses as the opening of Europe, as I said, started with a quite negative sentiment, pushing most of the markets lower. The dollar is benefiting from this situation as dollar Swiss moves above 99.100. That was our initial target, and looking for test of some important levels at 99.50 zone, where it's 200 days moving average, and possibly test of parity level, 99.50, which is Fibonacci resistance, and the parity level ahead of 100.50, where is 200 days moving average. Also, dollar yen lost ground after losing its important support at 79.00. That was a previous range low, and the 200 days moving average currently testing 78 level. That was we have already seen brief break below this level, and looking for extension towards next key support at 77.65. Overall negative tone at the beginning of the week promises most likely a lot of action in the week that is coming, and it's also the last week of the month of July. Thin calendar today, not much to be seen. Only the consumer confidence from Eurozone due at 1400 GMT, with no change forecasted for today, -20 compared to -20 of the previous release. So we are not going to waste time more and move into the technical part that you are all expecting to see what are the expectations for today and the pardon, short-term movements for the major currencies and the commodities, starting with euro. As said, continuation of bearish run from last Friday, with overnight gap lower opening of the single currency after losing 122 and 121.50 supports, currently already below 121.100, heading towards our next target at 120.00. This is now threatening a full retracement of a long-term rally from 2010 low at 118.75, posted on June 2010 to 149.38 peak of 2011, posted on 1st of May 2011, as negative tone continues to dominate on all time frames, with the hourly studies being quite extended at this point, yet no any signal of reversal, except suggestion that oversold and overextended conditions are usually preceding a corrective rally. So far the hourlies are still pointing firmly lower despite holding in the their extreme points. A similar situation with the 4-hour chart studies after the upside was capped by descending a 55 days moving average at 123 zone, and the fresh slide through 122, 121.50, now trading below 121 handle. Studies, so indicators all in the negative territory, all still pointing lower, seeing good potential for further extension lower, and test of 120.00 as our initial downside target. That is not so far anymore. Daily structure is also negative as RSI is now approaching the barrier, the downside barrier of oversold territory, while MACD and momentum are firmly in the negative territory and still pointing lower, seeing a potential for further extension. Overall, quite a bearish outlook for Eurozone, also boosted by negative tone and increased fears of about the future of Eurozone, as Spain is now on the good way to follow Greece and the other countries, with the negative sentiment keeping the downside firmly in focus. Immediate resistance is now standing at 121, 121.33, which is the high of the Asian session, and close to it is 121.43, the low of last Friday. This is seen as initial resistance ahead of 121.80 last Friday's intraday low, and 122. I would say at this point regain of 122 might bring some near-term relief and prevent the pair from a further slide, but anything below level set of 122.50, I would say 123 would be seen just as corrective. Only regain of 123, 123.30 zone, that is still acting as a key barrier, and the break point would signal for a change in the near-term direction and allow for a stronger bounce higher. Otherwise, bears remain firmly in play, and will look for extension towards 120 and possibly 118.75 to be seen on a break in the short term. Similar to euro, the British pound against the US dollar is in the negative mode after failure to clear a very important and strong barrier at 157.50 zone, where is 200 days moving average that basically keeps the upside limited from mid-May 2012, since the price broke below, and so far did not manage to regain these levels despite one brief break higher to 157.76. That was short-lived. Failure as said to regain 157.50 has triggered a fresh slide. I think we mentioned this in our last Thursday and Friday's, especially Friday's analysis, that further failures might be signal and trigger for a more significant reversal that so far have materialized, as the pair dipped below important support 156.00, where is the round figure support 38.2% retracement, and 55 days moving average that is now moving slightly towards the downside from its near-term sideways movements, with the 20 days exponential moving average now pointing firmly lower and looking for a cross below 55 days, one that will confirm the near-term bearish structure. Immediate support now is the immediate support is seen after the pair tested the 155.50 support zone, close to 50% retracement, and the low of 17th of July 2012. 155.23 is the 61.8% retracement ahead of 155.00 is around the figure support below, which will confirm bears are fully in play, and look for a possible test of levels towards 154 level, where we have 154.30 approximately 20. I do apologize, which is the trend line, the support drawn of 152.67 low, and then the most significant 154 zone, where the higher low and the support was found recently on 12th of June after a fall from 157.21, dipped as low as 153.92, but a brief break below 154 handle did not trigger further losses, as the pair found a good support. Basically, the pair in the short-term run is still seen within the range, with upside being capped at approximately 157.50, while on the downside 154 zone offers good support. A loss of 154 would be very bearish and will signal continuation of the larger down move from 163.00 peak of 2012 to possibly re-expose 152.67 low of the year posted on the 1st of June 2012. A negative tone and the studies in the negative territory are dominating in the lower time frames, with the 4-hour chart MACD currently breaking below the midline, and the loss of momentum seeing potential for further extension lower. However, hourly studies are now signaling a possible corrective action as indicators dipped into the oversold territory. Immediate resistance on the upside 155.80, 156, where is also descending 20 days moving average ahead of another static barrier at 156.24. I would say the regain of minimum 156.50, 156.80 is would be required to confirm the bulls coming back in play. Otherwise, any other movement under these levels would be just seen as corrective. Yet this is the pair is still in the near term uptrend of 153.92, but now risk is seen of a break below 152.23, which is 61.8% retracement to confirm the change of the near-term direction, and the refocus levels on the downside, as mentioned, 155 and 154.60. The dollar yen as well lost ground again after a brief consolidation was seen at 78.45 on a loss of 79.00. Previous range floor and 200 days moving average, extending losses through 78.42. That was the previous low where the pair underwent a brief consolidation during the last week. 78.42, 78.79 was the consolidative range before the fresh slide. Loss of our initial target on the downside at 78.00, with the 77.93 seen so far, sees potential of further extension lower and possible test of our next target and the key short-term support at 77.65 low of 1st of June, to possibly continue, loss of which to possibly continue the larger downtrend from 84.17, the 15th of March 2012 peak, and the also yearly high with 77.30 and 77 levels seen next on a break below 77.65. A brief corrective action might be seen as the pair is currently attempting to base above 78 level, as studies on the 1-hour chart are extremely overextended, with stochastic started to pointing higher, yet no firm signal of reversal, but suggestion on such extended conditions is would be for some corrective action preceding fresh weakness. 78.42 previous low now acts as the initial resistance, reinforced by 78.30 descending 20 days moving average ahead of 78.50 zone, where is 55 days exponential moving average, and the 78.80 previous consolidative range top. Only regain of 79 level, where is also 200 days moving average, would provide temporary relief and prevent pair from a fresh slide. Otherwise, any movement under 79 would be just seen as a corrective action and preceding a fresh weakness towards 77.65, 77.30 and 77.00, our next downside targets. The dollar Swiss continues its bullish run after clearing important levels at 98.70 and 99.00, ending the brief 98.71 to 97.45 corrective action, with the overnight gap higher opening now heading towards 99.50 and the parity level. 99.50 is 61.8% retracement of the larger longer term downtrend from 2010 high at 117.30 to 2011 low at 70.67. That also marks historical low of dollar Swiss, and we have quite a strong resistance zone at this area, 90 starting with 99.50, then 1 as a parity level, and 100.50 that marks 200 days simple moving average. And the break of basically break of these levels, this zone of around 100 pips resistance band would be quite bullish for the pair, as it will signal a further extension higher and further retracement of 117.30 to 70.67 descent. Overextended, extremely overextended conditions on the hourly chart see potential for corrective pullback with immediate support standing at 99 zone ahead of 98.71 previous high as acting as initial support. The critical support for the near term and the key support of the near term action is at 97.45, last week's low, and the higher low of the longer term rally of dollar Swiss, and basically loss of 97.45 would sideline bulls in favor of stronger corrective action. And the crude oil is came now under pressure after extending gains to 93.22 last Friday. We said on our written analysis that possibility of corrective action is quite high, as end of the week brings more covering of positions, covering of larger longs that push the pair, to push the oil price quite high, as 93.22 seen so far, with the current pullback testing so far 23.6% retracement at 89.50 zone, ahead of a more significant previous high at 89.00. Ideally, a reversal should occur somewhere above 87, around 88 zone. That will not be harmful for the short-term rally and will open way for further extension higher. However, now increased fears of future of Eurozone and possible spreading of the crisis that will automatically signal a lower demand for the energies is now putting additional pressure on the oil price. But from the other side, quite strong technicals seen on the larger time frames see potential of further extension higher. Our critical barriers on the upside are at around the 97 zone, where it's 200 days moving average, and the $100 per barrel as psychological barrier and break point. On the larger picture, also the the key support stands at 83.64, higher low posted on 10th of July, and the only break below this level would again turn the focus lower. So far, the oil has built a good base and leaving a double bottom at 77.54.27, and clearance of important barriers at 87 and 89 has extended so far against immediate dynamic barrier stands at 93.70, which marks 90 days descending 90 days moving average, while on the downside 55 days one at 87.30 offers another dynamic support. So far this pullback is seen corrective as long as at 87 level keeps the downside protected, and more risk would be seen, more risk of a further retracement would be seen on loss of 87 level. And finally, look at yellow metal that remains fragile so far as current sideways but skewed towards the downside moves. Movement see the upside quite well protected as 1600 as our initial barrier stays intact for now. Immediate focus is turned towards the downside as studies are on for our chart are losing traction and looking for test of initial support at 1567 level, with the more negative tones seen on the hourlies that are firmly in the negative territory, and the test of break of 1567 would be trigger for further weakness towards 1554 and 1548 levels. Daily structure is still negative with the rather sideways movements limited on the downside by 1550, on the upside by 1640, but all the indicators are skewed and turned towards the downside, with the 55s descending 55 days moving average currently maintaining the near-term price action, and the 1600 seen as the cap for now. A risk would be seen on loss of 1554, 1548. That will automatically open way for a possible retest of critical 1530 20 zone, and a possible break lower to trigger a further more significant weakness on the gold's larger down move from 1920 historical high posted on September 2011, with the 15, 20, 30 zones so far holding the downside, but risk is seen, and the price being underpinned by ascending 90 days moving, 100 days moving average on the weekly chart, currently at 1550, with loss of these levels and the 15, 20, 30 to open way for more significant movements, and a possible test of levels towards $1,400 per ounce. That was all from today's live session, and now it's time for questions and answers. Please, if you have any question, you can submit them now. Okay, we have a question for Aussie dollar. The near term, the pair is in the corrective mode, reversing off a recent peak at 104.43. This was, pardon, last Thursday's high, as a strong rally through 200 days moving average at 102.76 and break above previous high at 103.26 has triggered a fresh rally through 104 to hit so far 104.43. The pullback on overbought hourly conditions is so far seen corrective with the slightly below 38.2% retracement seen so far, and the 55 days exponential moving average along with the static supports at just below 103 zone so far holding the downside, but studies are still firmly pointing lower. Further extension down is not ruled out. This is on the 4-hour chart. On the hourly, already overextended conditions did not materialize in any more significant corrective action, as a brief bounce of overnight's low at 103.04 just moved a few ticks higher ahead of fresh weakness, as bearish crossover of 22 and 55 days exponential moving averages puts additional pressure on the pair. I would say at this point further weakness cannot be ruled out, and the further extension towards levels to watch 102.71 50% retracement, and 102 30 zone low of 17th of July, also 61.8% retracement, as the pair broke below initial supports at 103.26 and 103.00. Risk is seen more and more towards the downside at this point, as near-term studies are still pointing lower, and the levels, as said, 102.71, 102.30 to be watched. Only loss of 101 higher low of 12th of July would put the short-term bulls aside and allow for a stronger reversal. This is the level higher low here, and it will be quite bearish in the short-term run. Otherwise, any reversal above ideally should be around 101. Would be just seen as the corrective action, and the possible ahead of a possible further extension higher, with the levels on the upside at 105, 105, 105, 105.56 and 106.00 seen as the next upside targets. For now, the downside is more favored on the near-term run. Any further question? Okay, it seems that we don't have more questions for today. Anyhow, I would like to thank you all for attending our live session. We are back tomorrow morning at the same time at 7:00 GMT with the fresh news and updates, with the likely quite busy market to be seen in the coming hours of European and American session. Wish you a nice day, very successful trading, and expect to see you back tomorrow morning. Good luck.